Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, December 23rd, 5:21 p.m. Eastern Time, coming to you with the special Thursday edition of the Big Show. Since the markets are closed on Friday, I'm coming to you with the Big Show. Look back at the prior week, look ahead at what you need to know for next week after a 3-day stock market weekend, and take a look at an updated 21 over 21 leaders list. Let's dive right into it. I actually didn't have the right setup here, but let me get it set up. There we go. So, state of the market, we're in a consolidation. How can we be in a consolidation if we closed at all-time highs? Well, I'm going to show you in a minute that we are in fact at a consolidation. We're at the top of the range, and that's a double-edged sword. Top of the range closed all-time highs, but very close to some left side resistance that we just barely peaked above today that we could very easily pull back from if this rally is cut short. So pretty obvious from that statement that what we want to see is a bust to new all-time highs out of this range next week. And you can see over here with the trend gauge, we've had since last Wednesday a big strong follow through day. The afternoon after 2 p.m. Eastern with the Fed release and Jay Powell's press conference was handled or accepted by the market very positively at first glance. Then we had 3 straight days of selling. Now, granted, we've got Omicron news to factor in here too. Then those 3 days of selling were followed up with 3 straight days of buying with an all-time high close, leadership participating, basically taking back the 3 days of losses and tacking on a little bit to that. So therefore, market leaders are back to an uptrend today. So there's certainly, and the 21 and 21 list, we could have kept all 21 names on it from last week. And if those could stay on it, then that tells you all you need to know about how leadership is acting, because if leaders don't break the 21 on a weekly basis close, then leaders are acting fine. So move that to uptrend. Are we making progress in our accounts? Yes, we are. So that's another reason too. And then also the action of the G5 indexes, while it has not been overwhelming, it's been at least in line with what the market's doing. So market leaders go from neutral to uptrend today. The short-term trend goes from down all the way to up with 2 closes above the 21 on all the indexes. Only 1 close on small caps, but we'll get to that in a minute. Medium term from neutral to up, as we're above the 50-day moving average on the 3 big indexes and the mid caps. The holdout again is small caps, and long term stuck on positive. Haven't come off of it for since July of 2020, but we need to get small caps back above that. They do continue to lag over the longer term, and they just had a very sharp downtrend. You know, hard to believe if I told you we've had 2 bear markets this year, you'd look at me like I was nuts, but indeed, growth stocks have had 2 very severe 20% plus pullbacks in some of the key ETFs that track growth stocks that we monitor. Not necessarily on the small cap indexes; they didn't quite get to 20%, but close enough to 20% to certainly make us take a look at what's going on with the market, what we're holding, and adjust accordingly. And the rules that we put in place since the first stealth bear in growth stocks back in February and March certainly helped during this last one. I talked about that in one of the prior videos that I did. So what happened today? Santa Rally Day 3, G5 participating just fine, up 0.9%, S&P up 0.6, NASDAQ 100 up 0.75, Dow up 0.55, mid-caps up 0.7, Russell 2000 up 0.9. Let's get to the market facts and match it to the charts. But first, let's get to the team here at Revere. There we are, smiling faces, keeping your portfolio out of harm's way in an uptrend. sorry, out of harm's way in a downtrend and participating in uptrend. Some challenging times this year. We've come out the other end of it very happy with where we are in our process and how that has handled how we've handled the accounts, particularly over the last 6 months. So, if you have any questions you'd like to reach out to us, we'd love to talk to you. Any of the six of us. It's our first name at revereasset.com. That's Dan, Tim, Hunter, Mural, Alex, or Don, or call 855 Real Wealth. That's 855 732 5932. Now let's get to the facts and the charts. So here's the S&P 500. You can see very clearly this. Let me go to the 60-minute because this shows it best. So here is your Wednesday follow-through day. Big strength after 2 o'clock on Wednesday. Brief follow-through at the beginning of the day last Thursday before a sell-off. Followed through to the downside on Thursday. Big gap down, but did finish off the lows on Friday. Gap up. Sorry, that was Monday. This is Wednesday. This is Thursday. This is Friday. So gap down on Friday, then another gap down on Monday to start the week. This was primarily on Omicron fears. But as the day went along, or as the week went along, apparently this extremely contagious version is not getting people as sick as any of the prior ones. So that could lead to herd immunity, and some of the reopened stocks, which got hit hard at the end of the prior week, came back to life this week, along with the indexes and along with leading stocks. So gap up on Tuesday. On Wednesday, we opened just about flat, but trended higher most of the day. And then another gap up today, trended higher most of the day, except for some profit taking the last 5 minutes into the 3-day weekend. So there's your big V recovery off of the Fed. Let's get back to the daily chart here. Actually, no, 60-minute chart. So here's why I'm saying we're in a consolidation. This 46.50 to 47. Well, the high 47.44, but really we'd have trouble making any progress above 47.13. We poked our head above it here, poked our head above it there. Finally, a close above it. But when you factor in all of the overhead resistance, we've still got a little bit to deal with. So the bulls want to see a break out of this range. Maybe a little bit of a handle gets put in just to shake out some survivors. This is kind of the way when you break out of consolidation straight up from the bottom can be problematic, although again we do have seasonality in our favor. Ideally, if I'm writing the script, Monday, Tuesdays are a consolidation, and then we close the week strong. I don't get to write the script though, but that's what I'm looking for as I enter every day with an expectation versed on prior action, and then we see how that expectation is confirmed, or if it's 50-50, or if it's completely broken. So state of the market, as I mentioned, consolidation, but at the top of the range. The headwinds continue to be strong U.S. dollar, COVID, Omicron, and inflation. Put call is elevated, but not so much so that it's a contrarian indicator. The VIX has fallen to 18, and that's below the 50-day moving average. This is one of the notes that I made. Alex has been doing a lot of studying of the VIX and how it reacts. When you break below the 50-day, you kind of want to have your portfolio loaded, and that's what we've been doing over the last 2 days. And I say see 1014 to 11.9 S&P 500 rally. So this was the last time the VIX broke below the 50-day moving average. So you see this correction here from mid-September to the beginning of October. That coincides with, let me bring up the VIX. That coincides with the VIX being elevated and above the 50-day moving average. Here we start to break below it around 1010 to 1013, gap down. This period here corresponds with a nice rally in the S&P 500. You can see the S&P 500 up here. So as you approach down to the 50-day moving average, you want to have your watch list updated. You want to start taking some shots here as they cooperate, and as long as it is confirmed by what the VIX is doing, which it has been with the hard drop over the last 3 days, including this hard reversal on 1220, which corresponded with a hammer off of the lows in the indexes. It's lining up and it's confirming what we're seeing here, and that's one of the reasons why we've been buying over the last couple of days, with the confidence that we're seeing in the VIX coming down, the indexes, leading stocks, including the G5, getting above their levels from the Fed breakout, and all signs, we go by what we see here, how we interpret it, and as always, we've got our stops in place. If we get stopped on everything, we're less than 3% to the downside before we would get taken out. So we reclaimed our bull case, which is being above the 21 and the 50-day moving average. That was reclaimed yesterday, as you can see here, and then followed through today to the upside. I mentioned about the VIX 50-day and the Santa rally at 4,700. That was what I was watching, my expectation coming in today. That was confirmed. Second at-home COVID pill officially okayed today. The action, mild gap up, trend up, profit taking in the last 5 minutes. We got the break, the VIX below the 50, as I mentioned. So portfolio today started out with a 1.11 beta. By the end of the day, we're up to 1.60. So increasing exposure. We increased yesterday, increased today. Today we bought Tesla, CMG, and Trade Desk, and added to our existing Marvell and Micron. The canary in the coal mine, Micron, I talked about that in Tuesday's video, and a strong follow through to the upside today on that, giving us further confirmation that this rally has legs. Strong sectors today: banks, fertilizers, basic materials, and industrials. Bonds weak, which means interest rates are going up, and utilities and real estate. These are defensive. When you see them weak, it's further confirmation that money's coming out of defensive issues and into growthier type names. So as far as the levels, we closed at 47.26, as I mentioned, reclaim of the 50 and the 21-day moving average. We're at the top of this all-time high prior range, this resistance zone. Want to see follow through to the breakout next week. 21-day moving average and 50-day moving average reclaimed this week. You can see we're trending above them. The prior all-time high pivot, 45.46, that's back here. That was tested and held late November, tested and held again this week, and that gives you further confidence to play the bounce when you see support hold as it should. Putting in the bottom just like we would want it to. And now all the way down the 200-day moving average at 43.62, 8.3% lower, comfortably above that. So those are the key levels on the S&P 500. What we want to see, as I said, if I'm writing the script, 1 to 2 days of a little bit of a pullback before following to the upside to close out the year. You don't always get what you want, so the fact that I just said it probably means we won't get it, because we have just had 3 straight days up off the bottom. But everybody's going to say volume's light. Well, volume's always light during Christmas week, which is traditionally a bullish week. So price is what pays, and we recaptured the pullback. That's and we got our stops in place, and we made progress in our accounts this week. So that's about all you can ask for. Let's go for the NASDAQ 100. You can see approaching this 400 level. This is what we want to get across. This is very similar to this, 1720 or 4720-ish level on the S&P 500. 3 days up off of 3 days down with the Fed. Same setup. Back above the 21 and the 50-day moving average. Can't complain about that. Dow Jones Industrial Average, 2 closes above the 50 and the 21. 3 days down, 3 days up. Bounce off the 200-day moving average. Mid caps, 3 days down, 3 days up, above the 21, but still below the 50. But note the 50 is still trending higher. That's considered a positive because the slope of the line is still going higher, but we want to get above that next week. And finally, IWM Small Caps. Obviously the worst, you can see from the chart, the 3 days down. We actually only had 2 days down on this, and this was one of the reasons why we had a little bit of we were not as concerned with the indices pulling back because we had some good action by the G5. This showed some optimism on 12/17. It wasn't 3 down and 3 up. And then you had the hammer on the third day, just like we did on the other ones, and then 3 up days. So we got back above the Fed days. I talked about this in Tuesday's video, quicker on small caps and on the growth portion of small caps, IWO, which again, we watch these G5 closely, and this is good. This is what we want to see. Above the 21 on IWO. Let's quickly go through the rest of them. FFTY, still below the 21. You've got, again, not 3 days down. You've got 2 out of 3 days down, the hammer, and then 3 days up here above the Fed day. So more reason for optimism from small growth stocks. Let's look at PDP. Above the 21, this one's actually acting better than most of them. Note the relative strength here on PDP. We've got ARKK. Ran into the downtrending 21-day moving average. ARKK we want to see get above this 100 level. Note the strong action again here on 12/17 of ARKK. This told me that the bottom was in for the beaten up small growth stocks, and that has been confirmed for the most part with the stocks that we look at that are in these 5 ETFs, and also in the what we have in our watch list that meets that criteria in the 21 over 21. And the last one, QQQJ, above the 21, ran into the 200 again. You see this this middle day of the 3 down day on the big indexes. You saw outperformance on small and mid cap growth stocks. So happy to see that. So we studied the indexes. We went through our market facts. You know what we're looking for next week to break above the top of this range that we're in, a range that coincides with all-time highs on the S&P and just a stone's throw from all-time highs on the NASDAQ 100. So now let's get to the 21 over 21 leaders list as I adjust my sizing here. So what got punted out last week? And again, there were two that got punted out, although they could have stayed, but I replaced them with other stocks within the same group that were acting a little bit better. The first one is Qualcomm. Qualcomm, we got stopped when things were looking bleak on Tuesday before the big positive turnaround. That was its third day under the 21, got stopped out on that. Yeah, it's back above the 21, but we put that money into AMD, which was added to the 21 over 21 list, as this had a nice volume bounce off the 50 up through the 21, a beautiful consolidation day on Thursday before a follow through to the upside. I'm off by a day because today is Thursday. Nice consolidation day Wednesday before a gap to recent highs that stuck for the most part today on Thursday. And the other one was Ford. This is when we're still looking for really defensive leaders that helped us fill out the 21 over 21 list. But you can see the relative strength lagging over the last 2 weeks with this, although it closed above the 21. But this was replaced with a new buy that we did today, Tesla, which has showed remarkable strength the last 2 days as Elon Musk is apparently done selling his shares. And you can't ignore the volume on a Christmas week the last 2 days when this stock has been bought hand over fist. Average volume Christmas week is the equivalent to way above average volume on any other day. Above the 21, above the 50-day moving average. We bought some shares of that this morning near the open. So those are the two new entrants in 21 over 21. Now let's just go through the remainder of it. LRCX. You see you're going to see this very frequent 3 days down, 3 days up action, this V-shaped recovery in these stocks. Will it stick? We don't know. We don't guess. We follow price and volume, not volume as much this week, although there was volume in some of the things that we bought into. But as always, we have our stops in place, and we don't just want to sit on our hands when the market starts acting favorably because we stick to low risk entry points. Berkshire Hathaway, 3 tight days after the pullback. Vulcan Materials building near all-time highs, cup and handle formation. Palo Alto, all-time highs. You could also have Fortinet on here, FTNT, as I mentioned last week. O'Reilly, the auto parts are acting well. These are defensive. Can't complain with the action. ICE, still in the upper part of this flat base that it's forming. A lot of them undercut. You see this 3-day undercut and reclaim, but it's how we close on the week that's most important. Cube, a REIT at the top of its range. Toll Brothers, we bought this on Wednesday. We bought Toll and DHI. Really nice. Look at the volume. Again, Christmas week. Normally light volume, but not in Toll Brothers. Look at the volume here. Tuesday and Wednesday, and then a beautiful consolidation day Friday. We have Toll and DHI. I'll show DHI since we bought it, but only one in the 21 over 21 list. But let's see which one of these dominates. If Toll starts to act better, we'll move the DHI money into Toll. And these have overcome the poor earnings reaction that Lennar had last week, as Lennar has even recovered. When we saw, I have all 3 of these on my quote screen, when all 3 of them started acting the same, that's confirmation of a group move, and we got into it by buying Toll, which was already in the 21 over 21 list. NTR continues to be extremely strong, all-time highs. Micron, so here's the canary in the coal mine. It was on the 21 over 21 list. It had the big gap up here on earnings, did not give it back on earnings day or the day after. Tight inside day on lower volume, and then more volume came in. This is exactly what you want to see. This is a big liquid leading stock that institutions are buying, plain and simple. Canary in a coal mine. We want to see if it stick. If it was going to stick, it did. Great consolidation day, and then day 3 higher volume than day 2 is rare after an earnings move. Day 3 higher high, higher volume, everything that you could look for acting. And I probably just jinxed it, but this is our largest position now. We did a pilot buy, 2 more buys today. So we've got 6.5% size on it. We could fill that out up to 8 if we wanted to, if we get a gentle pullback into the 5 or 8 EMA. But for now, leading stock, leading sector, acting well with volume. Costco really survived the pullback very well. Didn't really participate in the bounce because it didn't need to, because the last 3 days you've seen a shift from defensive stocks into more growth stocks, so not surprising that it hasn't gone anywhere, but clearly a leader. Sienna, all-time highs. AMT, again, not really participating in the rally, but it didn't participate in the drop either. Marvell, we bought a little bit more of this today on the lower volume consolidation after 4 average to above average days off the 21, acting just the way we want it to. ANET, we added to this week, all-time high close. Apple, off the 21, acting perfect. Pure Storage, a little bit of a reversal off of the breakout today. Don't like to see that, but you can't complain about stocks near all-time highs. BLDR, it's a construction stock, but has a little bit of a growth flair to it. You can see it sold off but held the 21, and then a big rebound the last 3 days. You would expect stocks like this to not participate, but Toll also confirmed strength in building overall. This is more commercial as opposed to Toll, which is a home builder. And then finally, New NUE, steel producer. Didn't give back much on the pullback, didn't get much on the rebound, but hanging right above, right around this flat 21-day exponential moving average, and that's your 21 over 21. I want to mention 2 other stocks that we bought. CMG, bounce off the 200-day up into, actually bought it when it broke above the 50-day moving average. Today it closed basically right on it, or a tick below, 1/10% below, but tight stop on this as you've got the 8 and the 21 curling up. Tim mentioned this in his video last night. And then also Trade Desk bought this late today. With a move, it's really tightened up nicely. Bounced off the 50-day into the 21, a consolidation day on Wednesday and a move above the 21 on Thursday. Really nice action on the trade desks, and we bought this today. So they're not in the 21 over 21 list because I didn't have other ones to kick out, but they certainly are looking great. One other one, CF, which is not in the 21 over 21 list, but very well could be because it's acting just great. And that's going to wrap it. As always, let me know if you like this video, you hate this video, you want to see something different in this video. I'm always open to feedback. I'm on Twitter at dvandenbord, email don@revereasset.com, phone 855-REAL-WEALTH. Very Merry Christmas to everybody out there, or Happy Hanukkah, Happy Holidays. But this is the last video before Christmas Day, so certainly want to send that out to everybody. And we appreciate all of our listeners, all of our clients. Without you, we don't exist. So best wishes to everybody out there. So wrapping up Christmas week, 12/23. This is Don Vandenbord telling it like it is. Thanks for listening. Merry Christmas. Have a great weekend.